Hello, everyone. Happy Wednesday. This is Simon with AvaTrade. Welcome to our webinar, Interactive Trading Conversations. I see some new faces. I'm very happy to see new faces every time. That's really amazing. So we're starting our webinar, Interactive Trading Conversations. My name is Simon Friedman. A few words about myself. I don't like to keep on saying it, but that's the truth. I'm a senior account manager with AvaTrade. And I've been trading for the past 24 years. I started as a prop trader back in New York City in June of 2000. It's been a lot, and at the same time, it just went by like maybe 24 months. And I was a prop trader for about 11 years. If any of you know what it is, it's pretty intense. And after that, I moved in less, well, I like to call it, environment. And also started to mentor and educate others. And I'm very happy to have a great opportunity to assist our customers at AvaTrade. Now, agenda of the webinar, it's very simple. We ask questions. And this was the idea of me creating this webinar because we have an amazing spectrum of presentations. My colleagues and I, we do almost every day. There's a lot of webinars that we do. We prepare and we give it to you a lot of information. And I just got an idea that why don't we just give podium to the audience, and then pretty much it's your show. You're going to be asking questions about specific markets. And we'll be discussing it and trying to analyze and trying to make sense out of it, right? So you ask questions by typing the same thing as you were confirming that you could hear and see me. Not see me, but the presentation. So just type your question, specific question. For instance, what about gold? I think this is the way it is. Or what about euro, dollar, oil? Any asset that's tradable on our platforms. And we'll be analyzing it. And we have up to an hour. So I would really like to avoid begging for questions. It happens sometimes, and I don't like that. So let's use this time proactively. Also, very, very important that some people will be watching this in the recording. So they're not able to ask questions. So you playing the role of channels for those people. So please feel that responsibility and the privilege as well. Okay, so a risk warning, you can find the full statement at avatrade.com. And of course, what we do here is purely educational. We do not suggest any trades, obviously. Now, social media, you have Telegram, you have X, which is used to be Twitter, and YouTube channel as my favorite. You can find a lot of tutorials, educational materials. You can find webinars that you'd like to browse through, or if you miss a webinar, you can find it on YouTube. It's really, really amazing tool. Okay, we're going to start now. I'm going to open the MT4. I also have MT5. It has more instruments in it if we need. And we already got the first question, Eric, opening the path for us. Eric is asking, why has oil taken a dive this past weeks? Any ideas? Thanks. Great question. By the way, we're going to be talking about technicals here. We're going to look at the charts at the same time. If I know any fundamentals, I'm not going to be searching for them, but I follow a lot of markets. So if I know any specifics as far as fundamentals, I'll be happy to share with you. Now, by the way, what would be great, let's create this active atmosphere. If anybody has any opinion on oil, please type it in. I'm going to read it. So Eric is asking, why has oil taken a dive this past weeks? One of the biggest reasons is China. Okay, and here it is. China's been going down. This past week we actually went up, but the numbers they're not so great. The GDP numbers are not great. They just had this symposium or whatever the thing you call when the leaders of the country, the Communist Party, they got together and they had to think what to do. Obviously, nothing good came out of it besides the 200 pages document. One of the analysts actually was commenting on it on one of the websites. So they're looking to increase production, whatever it is they're trying to do. China is one of the biggest users of oil. It's not producing oil. So this thing, back to oil. Oil has been going down. If you see this picture, when did it start here? May 20th, okay? The sliding started here. And let's take a look at oil on May 20th. Here we go. No, not here. May 20th, right here. Okay, we had the initial move. We came back here. Then we went lower on the China thing. Then we recovered here. That was a nice recovery all the way to, I think we passed 84. And now we're going down. The fear of, pretty much in two words, fear of lack of demand. Okay, and I think we had few inventories that were higher than expected as well. That didn't help. And that's pretty much. And people, we look, we think in stereotypes. We got used to in the past decades when there's an issue in the Middle East, oil should be flying through the roof, and I guess some people bet on it, right? And it didn't. So I think, in my opinion, also that's kind of a disappointment for the buyers, because they thought, okay, we're in 90s again. And Middle East is full of wars, unfortunately, and oil is going to go through the roof, go to 100, 150, whatever they were thinking. But then they got disappointed, right? So the moment your buying positions don't bring any money and they start showing you losses, you're getting out of it. So we had few intense selling here, and that's also in China. I think this happened when the China came out with really worse economic numbers than expected. Okay. Again, I apologize if I mispronounce your name. Gerhard, I think, is saying, I'm also trying to trade crude oil, but it's very volatile. Okay. So this is your oil, right? So we established, we tried to go to 84. We couldn't. We were going lower. I think this was the new contract here. The gap is between the old and the new contract. And we went below, yesterday, below the 200 moving average. Today, we're trying to recover a little bit over here. So if you're trying to kind of establish the immediate support, that would be yesterday's low. That would make sense, right? The low of yesterday was 76.38, and if you take a look to the left, you could see a lot of instances where we were at that level. Take a look. We established the support around here back in February, as you could see, and then we had a nice run. We came back again. This was with the China's initial sell-off, right? And again, it's not 100%. I'm just assuming that was because of China, right? And here we came back, and then we just broke through it, but it came right back, and then we're testing that level again around 76, 76 and a half. All right. Volatility is good, Gerhard. Again, it depends what's your trading style. Right. So I know a lot of traders that love volatility, because the worst thing you want to see with the market is just not doing anything. So volatility is good, especially we're in the middle of the summer, which usually volatility slows down. But a lot of things, we have all this fun with U.S. Elections, right? Biden not resigning, but taking himself out of the run. We have Harris now running, and other things. So it's very, very interesting. And of course, the war continues, unfortunately, in the Middle East. Ukraine-Russia war is there as well, even though people don't talk much about it. So a lot of things, right? So that's oil. Thank you. Great question, guys. Please prepare your questions. You can type the question. You don't need to even to wait till we finish. So we're just going to be going through the questions. We have up to an hour so far, about 10 minutes into the webinar, and let's keep going. Ask any questions about any instrument that you'd like to know about. Okay, let's go. You see, I don't like these poses. I don't see questions coming. We have a nice audience, a lot of new people. Feel free, again, let me clarify it. All you have to do is just type the question like Eric did, like Gerhard did, okay? All right, Eric's asking, the electric car industry seems to be saturated. Is this the cost of the Tesla poor report? Yeah, Tesla did have a poor report. The numbers were lower yesterday after the report. The stock gapped. I mean, after hours, it traded lower. Today, obviously, it opened with a gap. Let's take a quick look. Here you go. with the gap and went lower, right? So we're trading currently at 220. It, First of all, it's a new industry, right? You have Neo, you have other things, you have Lucent, you have a lot of companies that involved, also big names. You have GM involved, you have Ford involved, you have Mercedes, Volkswagen, all of them are involved. And it's kind of, logically speaking, they're all trying to switch. A lot of countries trying to switch with no emission cars and other things by 2030. Some countries are doing great, like Norway, Sweden. I think they're doing great in that direction. But it's not so easy, I guess, to transform. And also, it's interesting because Tesla actually, right here, this move on Tesla, the moment we went about 200, went higher with gaps, huge move up. And if you remember, that was the report of cars sold in the second quarter. They usually report 2 days after the end of the quarter. So I could be wrong, but I think they expected 420,000 cars sold and they reported 440. So the stock went up. And I think as we spoke about one of these meetings, I definitely spoke about it with my team. And I said that the moment we hit this resistance here of the end of the year, we might have difficulties going higher. And if the numbers now would be great, it would probably go higher. But that's also questionable because the market in general, the indices are selling, right? NVIDIA is selling, the leader of NASDAQ, and other tech stocks are selling, and the indices are down today, right? I think, let me just give you an idea on the futures. So NASDAQ futures are down almost 3%. Wow, 2.86% on NASDAQ futures and so on. So, of course, bad earnings are down. The industry as all, you can look into fundamentals and see what are the predictions. It's not so easy to understand that because, again, it's a relatively new industry, right? Okay, thank you for your question. Gerard is asking, Euro USD also down. Yes, the dollar is strong, right? If you want to see the currency, I'll give you a little bit of a secret. You want to see the US dollar index, right? And take a look. Actually, the past few hours we are selling. Here we go. We did have a nice morning up till 7 a.m. on US dollar, and then we were going lower. Now I tell you a secret. What is moving today is the yen. Here we go. The yen is strong across the board, and we spoke about these things. Take a look. Finally, yen started to move. Also, I think towards the end of the month, there's a meeting of Bank of Japan, and maybe they expect some actions from them. So this is the yen. But if you take euro dollar, it actually it's recovering a little bit. And take a look on the daily chart. We hit exactly 200 moving average over here. Isn't that interesting? And we bounce right out of it. So if you look at other currencies, there should be similar picture there besides the yen. The yen is super strong, and you could see that it's really a significant move. We went from 161 to 153. That's actually exactly 800 pips. That's a huge move, right? So, but again, I jumped from euro to yen just to point it out. Take a look, but this could be just the beginning of that reversal. It could be, again, this is the month, right? This month happened in a few days. This is the monthly candle, but the truth is it did happen in pretty much in a week or two, all right? So that's euro. Yes, we have to watch dollar. Now, very, very important. We have the upcoming announcements on the economic calendar, and Friday there's an important information that has to do with inflation as well. The expenditure, the consumer expenditure numbers, and they're coming on Friday. So market definitely will react to it. And if you take again euro dollar or take a dollar as dollar index. Take a look. We've been sitting here for a few sessions, right? And this is the key level for dollar index, right? You trade any of the major pairs against the US dollar, it's important to take a look at dollar index. We're at the key level here. Take a look. We dropped from here. We had a big fight around this level, around 104. We had another move up right from this level. We had few attempts to break it, including this spike, and then we did. Then we came right back, and we right at square one. So this level around 104 is a key level. So I guess the market is waiting, to see what numbers are coming on Friday. All right, so that's your euro dollar. Now, next question. Why was gold performing so badly last week on Thursday and Friday? One thing I can tell you, when you trade gold, or these days gold, especially gold, dollar, and the equities, you need to watch what's happening with 10-year yields. I mentioned it already a few times. I'm gonna take a screenshot now. I'll show it to you. Just 1 second. So I think somebody even asked me where to look for 10-year yields. You need to Google it. You need to find access to it. So give me just 1 second. Of course, 10-year yields are important when you trade these instruments. I'm going to show it to you in a minute. Here we go. You see, take a look. Today, this is the 10-year yields. The last candle is today. So this is Wednesday, Tuesday, Monday, and take a look. Thursday and Friday with a huge move from about 415 all the way for 425. So these 2 days, and then Monday again, the yields, the 10-year yields were up. Then we were flat yesterday, and today we're selling. So according to this, we might see the opposite thing on gold. So gold, Thursday, Friday, Monday down, Tuesday flat, and today should be a little bit up. Let's see if that works, right? Again, nothing is in stone, right? Here we go. Actually, no. Yes, here we go. After making a brand new high on the 17th, I think that was Wednesday, Thursday and Friday we had a sell-off. Monday we tried to move out, to move high. Actually, no, this is the okay. And then today, as we said, as yields are cooling down, today we're in green again. So if you are trading gold, it's important to see the yields, because that reflects on the bonds, of course, and bonds are connected to the interest rate, right? So that's your goal, I think, reacting to that 10-year yields. And definitely there could be other reasons, of course, anything. But that's the main thing that happened on Thursday and Friday. The yields bounced after being in a down move. Okay, GBP USD. Do you think it will reach 131 soon? I can think anything I want, but it's not relevant. But let's take a quick look at GBP USD. Now, what's important, and I forgot to mention it, I always try to share with the audience simple approach to trading. You need to understand where the instrument is coming from, what's the dynamic of it. Now take a look. We've been talking about a few times that this channel between 126 and 128 has been going on for a very long time. Since we entered it in the end of November of last year, we were coming in and out, but the main actions were happening within the channel, as you could see here, right? Obvious support, obvious resistance. And then the moment we broke through again and start really building up, we did have a nice move and we hit the high here. Let's make it a little bigger now. We hit the high of 130.43. That's about 57 pips away from what you just mentioned, 131. And then we came back and we are showing a strong support here. So as I mentioned, Friday, those numbers that the Feds are watching very, very closely might affect the dollar. And of course, this is a two-way street. If the dollar gets weaker, the pair should be running up. And also, if we get some strength or some reasons for the strength of the pound, that would increase that move, and vice versa, right? And also important to know, as of now, we almost 100%, I think 90-something% probability, according to the CME futures, that September 18 is the interest rate cut coming from the Feds. It's almost done deal. Again, nothing's done until it's done, but the probability of it, it's very high at this point. All right, so this is your pound. What you can say, you ask me what I think, it's very simple. You know that so far we're holding this 129 area strongly. After breaking, going to 130.5 almost, we came right back here and we're holding this. We tried to put some tails, maybe take some stops out, but so far we're holding. That's all we know. So as of now, the 129, after we broke through, becomes a support, and we have this area here about 130.43. It's the immediate resistance. If you zoom out of it, you could see that if we choose to go higher, we could probably go even higher than 131. This is the high of a year ago, July of last year, July 9th, and the high here was 131.41. But at the same time, you know, it's obviously it's important to look back and see what the whole move came from. And there was September of 2022 when we went all the way to 103, right? So also important to know. And always know that the market will do whatever it wants to do. So try not to build a very strong conviction about anything. Have a plan, calculate your risk, and let the trade develop. Okay, great questions. Thank you, guys. Let's go away about 24 minutes into the webinar. We still have plenty of time. So I'm expecting some interesting questions. Please go ahead, just type them in and I will read them. Okay. Okay, last question, we have the pound. We went through it. Sorry, I didn't mention the name. Eric asked the question. Thank you for the question, Eric. Okay, guys, anybody? We still have time. Like I said, please think of people that will be watching this on YouTube. They have no ability to ask questions, so you're gonna help them to pull out the answers so they can watch it, okay? All right, I guess if there are no questions, we're gonna wrap it up, which is also fine. All right, I'll give it 3 more seconds. If anybody has questions, all you have to do, just type it in. So we spoke about a few things today. We spoke about oil, we spoke about electric cars, euro dollar, gold, pound. Great question, guys. Thank you very much. I don't see questions coming in. So, oh, okay. We do have 2 questions. Eric, thank you for saving the day. Tech is down. It's very simple. First of all, it's not the first time you probably hear that a lot of analysts were saying market is overbought. The tech sector is overbought, blah, blah, blah. Take a look. This is NVIDIA, right? We finally broke to that initial sell-off right here. The low was here 118. And I remember that day, in extended hours, we actually hit 115 that day on NVIDIA. And take a look. Today, we're actually beating that 115.47, currently trading 116.76. So all the major tech stocks are down. Microsoft down 3.2%, NVIDIA down 4.5%, Tesla down 10%, 10.5%, Apple down almost 3%. So NASDAQ is the index that all those stocks are within it, right? So it's normal. It's a correction of the market. The question is this a correction? And it's always a gazillion dollar question. Is this a normal correction, or are we turning to the downtrend? And I guess we'll find out soon. So far, I've been mentioning in my Sunday webinar here that if we do break this level here, it will accelerate the selling, and that's exactly what's happening. So that's what it is, and I guess we need to watch and see. And again, I'm getting back to those numbers on Friday. They will also be affecting the equity markets. Okay, next question, Ethereum. Good question. Ethereum, by the way, I think yesterday, Monday, there was a decision of SEC, which is regulators in the US, and they allowed, they approved the ETFs, spot ETFs for Ethereum, something that happened back in, don't remember when, for Bitcoin. So Ethereum reacted to it, but nothing crazy, because I think all this move was already priced in. So a lot of people got in pre-announcement or pre-approval, and it looks like they get a little bit disappointed. And when you trade Bitcoin, definitely, Ethereum, you have to watch the Bitcoin as a leader and see what it did. They go a little bit in parallel, as you could see, similar, this V recovery here, and Bitcoin V recovery, but going higher. So let's see how it works. What happened, if you remember, with Bitcoin, when ETFs got approved, there was initial excitement, and then it was a sell-off. We found the base, and then we went higher. So it could be that here something similar will be happening. You can read about it as far as fundamentals. You can learn about the details of those ETFs. But it's big. Something is trading officially as an ETF on the U.S. exchanges, and that gives a little bit more legit reasons to trade those instruments. As you know, some people are very cautious about the cryptocurrencies. Okay, Eric, great question. We have two Erics, Eric and Tor Eric. Okay, NZCHF, you missed the letter, it's NZDCHF. Great question. Let's take a quick look at NZD. I know one thing, NZD has been super weak lately. Here we go. And here we go. It continues being weak. And also, I reveal another secret for you. When I say secret, I'm trying to be funny, but it's all about China. And I've mentioned this a few times here. I know some regulars remember that. China is affecting a lot of things. And as far as the trading instruments that we trade, four major ones. You have oil, copper, and two currencies pairs that call them commodity currencies. That's the Aussie dollar and New Zealand dollar. So since the news are not so great from China, it also affects those currencies here. So here's your NZ, and it's been weak against any currency. And CHF, it's funny, CHF is I think the only major currency that they had already rate cut twice, the Swiss National Bank, and the Swiss franc remained strong. Anyway, as we know, it also plays the role as a safe haven, together with used to be yen. I think it's returning to it, and gold. All right. So NZD CHF. Interestingly enough, we're coming to a serious point, possible support at the current levels right here. Right. You can see it on the weekly chart, and when you go daily chart and try to zoom out, it's very clear. Take a look. It was a lot of action here. Then we hit the current level, and then we moved higher. Take a look. That's what happened today, right? We came exactly to this level. It would be funny if it's exactly to the point. Take a look. This move right here. Okay. On February 5th, the low was 052467. And here, 052466. Would you believe that? And some people say levels are irrelevant. Take a look. Not even a pip. A fraction of the pip. Wow. Here we go. That's where the move started. Again, you can take a look here at the bottom. Take a look at the numbers. I'm not making it up. It shows even here. Take a look. Low, 0.52467. You see that? February 5th. And today's low, Let's see if it brings the window. It doesn't. Why not? Weird. Okay. So here you can see at the bottom of the screen 2052466. One less digit is different. All right. Amazing. Okay, so from here again, we could make that move, especially if we see bounce from China, if we see other news from New Zealand and other things. And of course, the Swiss franc, it might be continuing being strong. When you look at the cross pair, it's important to see what dollar is doing against Swiss franc, and even dollar is selling against Swiss francs, right? So here we go. So dollar has been weak against Swiss franc. So there's something strong about Swiss franc. I don't know. I'm not aware of what's fundamentally strong about it. But one of the things, it could be safe haven. When there's uncertainty, people tend to invest in Swiss franc. So that's your answer. Again, going back to NZD-CHF, we might be facing strong support here, or we might continue going lower. Take a look. The volume is selling on the high volume as well. You're welcome, Alfred. Okay. Nokutula is asking, may you please give more explanation on the USD JPY trend this week? Of course. Here we go. Take a look. This was the intervention, if you remember. They never announced it, of course. It came unannounced, and I don't think even they really officially admitted it, but there's always speculation. So this was the move. I think this was the day with CPI data. I guess Bank of Japan used it, so they pushed through intervention, so it would be more effective. This was the move on the 7-11. You can check. I think that was the day where the CPI data came better than expected as well, so it pushed the dollar lower, and the yen went high as well. So there was a big move. Then take a look. There was not really a strong reaction in the opposite direction. So then we had another one. And I share with my team, I do market reviews for my team, and I share with them that after the second leg and correction, we might see another leg down. And that's exactly what happened here. We have 3 consecutive days. And it's important to see, take a look, the volume, as we go lower, the volume increases, right? As we're going lower, the volume is going higher. So that's really a sign of sell-off. So that's your dollar yen. Again, it could be anything. We could have an announcement. I think they're meeting on the 30th and 31st of this month. We could actually see that currently at the 0% interest rate, the Bank of Japan rate is. And a few months back, they finally increased it. They were, for many, many years, they were at negative 0.1%. So we could see some action. I'm sure they're happy for things that they're exporting, but Japan is buying a lot of things. Most of the commodities they buy. So it costs them a lot of money to bring commodities into the country. So they're suffering on that side. So I just dropped the trend line here. So if we continue, this is the weekly chart. If we continue lower, at some point we might hit that trend line. If that happens, of course, we can just turn around. Anything is possible. But logically speaking, if you take this pair, dollar yen, so one side we have upcoming September interest rate cut, so that would potentially push dollar lower, and we have potential moves from Bank of Japan trying to stabilize the yen. They already did amazing. If you take a look, like I said, we moved about 800 pips so far from not far ago, from the 10th of July. Today we are in 24, 2 weeks. In 2 weeks, we made 800 pips. So I guess we'll find out what's next, right? And again, Friday data will affect dollar and definitely will affect this pair as well. Okay. Okay. S&P 500. How is it going to affect election in the USA? We don't know. That's the beauty of election. First of all, we don't know the results of elections until it's announced and how the market will be affected. They try to make statistics. You can Google there are a few interesting articles. They compared actually what's happening now in the US to 1968 when Johnson won the election, I think. And no, sorry, Johnson, I think, stepped down, but he announced it. He announced it in March that he's not going to run for second term. And that year, S&P was up. I could be making it up. I mean, as far as the exact numbers, I read this article. I think that year, 1968, the S&Ps ended up being up 15%. They try to make the statistics, but you and I today, I don't know, fortunately or unfortunately, I guess each one of us needs to decide. We live in really, really crazy times. We had Corona, and nobody knew about it, right? Or we have wars, Russia, Ukraine, Israel war, all the Middle East issues, and we have elections. We have Europe switching from left to right, from right to left. You have all this circus. I call it circus with the U.S. Elections. I mean, it's all really got intense after the debates that they had. I don't like to judge people, but the old man can't finish the sentence, and he's trying to be a president again. So a lot of things, nobody knows how it's going to end. The market had tremendous move since Corona sell-off. Let's take a quick look. We've been talking about S&Ps and I haven't even brought it up. So here's your S&P. Take a look at the monthly chart. You know what? I'm going to just bring the clean chart without anything on it. So here's your monthly chart and S&Ps. This is Corona. Initial sell-off went from 3,300, 34 all the way to 22, like 1,000 points. We lost a third. I'm a little bit tired. I could be wrong with the numbers, but take a look. This intense move to the upside based on what? Technology, Nvidia, blah blah blah. Then we had a nice correction here, right? Let's take a look. We had all this move after the sell-off. We had a correction. Classical case, we stopped around 38%, and we had another leg to the upside. And this is the monthly chart, right? Super crazy. Against all the statistics, against all the numbers, right? Then we had the outside bar here on the week. That was last week. And now we're selling. And now we're facing previous support. There was multiple attempts to go lower. Instead of breaking through, we made the new high. But who knows? Maybe all these things was a build up before the short. Now, another thing, again, if you want to be creative, you can become creative. Take a look. We could be going sideways here and building the right shoulder here. I know some traders like to see this. Again, it's totally objective here or subjective. What you want to see, you will see. But take a look. If we start going sideways here, building the right shoulders, eventually, also potential that we can move lower, and that would be, you take, if this is the neck around 5,500 and the top around 5,700, that's 200, wait a minute, yeah, 200 points. So we could go down to about 5,300, which would just bring us somewhere here. Also a possibility, right? A lot of actions here. Pure calculations. Again, or we can just go straight down, or they will scream tomorrow they reinvented some new technology. We can continue higher. So that's the beauty of the market. You never know. But connecting it with the elections, very hard to say. There's a lot of positive and negative in Trump being a president. There's also a lot of positive and negative with the Democrats continuing their course. So it's not so simple, not so obvious. Right. Let's see what else we got. First of all, I thank you for not letting me finish. I really love to do this. Okay. 1 second. Gerard is asking best stock for the week. I'm not here to recommend best stocks, but you can see what's moving, right? You have a lot of stocks moved. You had Google, good numbers went up and then went down. You had Tesla selling. You have other things. You have Verizon is actually very positive, and other things. You have to search for your own stocks. I'm not here to recommend stocks. I'm here to ask. If you ask me specific questions about specific stock, we can discuss it. But recommendation, that would be really guiding you what to trade, and we don't do that. Okay, like I said in the beginning, we do not recommend any trades. All right, guys, we did great. I think you did great. Thank you for your questions. I hope to see you all next week. Same time, same place. Have a wonderful evening. All the best. Take care.